Initial jobless claims data has just been released, the highest level since February, but still under that key threshold. As well as this, the FOMC minutes looked cautious yesterday as external events worried the Fed. I'm joined on the phone by Jasper Lawler from CMC Markets to look further at the news coming out of the US. Jasper, there wasn't much reaction yesterday after the FOMC minutes were released, as markets were more preoccupied with the New York Stock Exchange shutting down for 3.5 hours. What the minutes did highlight were the external risks which could delay a Fed rate hike. Is there a risk that the Fed is being too cautious?
Well, certainly the Fed's been cautious throughout. I think we just have to bear in mind every data point, every comment from one of the Fed members. We have to bear in mind that Janet Yellen, the head of the Fed particularly, is very dovish, and the whole leaning of the panel is pretty dovish. So they're always going to lean towards the side of caution and keeping rates on hold for longer. And I think we're seeing that at the moment. The labor market in the US has been pretty healthy for a while. You know, you can point to slight areas of concern, wage growth, for example, being perhaps not as strong as it could be, but really no excuses. Inflation is not at 2%, but it's hardly deflation like we're seeing in Europe. So the Fed could have lifted off a few months ago, but they've chosen not to. They're being cautious, and I think they're going to use the concerns about Greece, which they mentioned specifically in these set of minutes, and also China as an excuse to hold off for longer. And I think if we do see some kind of Grexit, then that almost inevitably means that the lift-off from rates in the US will be past September.
Janet Yellen is due to speak on Friday. What could we expect coming from this, and could it be a clearer indication on the Fed's position?
Yes, I hope it does, because the latest set of minutes didn't really add too much to the picture. The speech on Friday is going to be a bit more current. Obviously, these minutes were really 2 weeks out of date, and we've since then had a US unemployment report, which, while was still above 200,000 and hardly a source of concern, did miss estimates and wasn't as strong as we'd seen a couple of months ago when it was pushing into 300,000 jobs created in the US, and wage growth was zero when there was expectation of a slight increase in wages. So we'll get her take on that. And as we were just discussing, my sense is that she's probably not going to add too much to the discussion, just saying that she sees broad strength in the labour market, but she does still see some concerns, like, for example, those wages, and she'll want to see more data before she's confident enough to hike rates. And I do hope she mentions something a bit more specifically on Greece, perhaps maybe some specific outcomes that she would expect to affect whether they raise rates. I suppose that's probably unlikely, but that would certainly be helpful.
Initial jobless claims, of course, have just come out moments ago. Higher than forecast, up 15,000, but still under that key threshold. What's your immediate reaction of the result?
Below expectations, and so that's how the market reacted initially, was a slight dollar sell-off. But really, in the broader sense of things, it is below that 300,000 mark. The 4-week and the 8-week average are still pushing into multi-year lows in terms of jobless claims. So the overall trend is still positive in unemployment claims and indeed non-farm payrolls data. I think the labour market is not the source of the problem for the US. It is these external potential shocks and just lower inflation than the Fed would like.
Some great insight into the US from Jasper Lawler there. For more interviews and analysis like this, be sure to keep clicking back to Dukescopy TV. For now though, it's goodbye.